Get some more perspective on all of this from Royce Mendes. He's Managing Director and Head of Macro Strategy at Desjardins. He joins us here in studio. Good morning to you.
Morning.
Okay, so as I said, this constant theme in an uncertain market is around interest rates, navigating inflation, how the economy fares in the face of all this. Let's just start with the Bank of Canada. I guess that's arguably the big story of the week for this country and what your expectations are heading into tomorrow.
So there's a lot of opposing forces this time around. There's the banking crisis outside of Canada's borders. There's the stronger than expected GDP and employment prints that we've seen recently. I think that largely means that the Bank of Canada is where it was at the time of the last meeting, and that's leaving rates on hold, but threatening that if the economy and inflation don't cooperate, that they could raise rates higher. And that'll push back against these cuts that keep getting priced into markets. The Bank of Canada does not want to see those cuts priced into markets just yet, given where inflation is at the moment.
Why do you think those cuts have been priced into the market?
So it's obvious that if inflation and interest rates right now are high, when inflation comes back down, you can pull interest rates back. So I think everyone expects that at some point, interest rates are going to come back down, and the IMF said as much earlier this morning. The question is when that happens. Central bankers don't want that to get priced into the markets too early, because that'll offset a lot of their tightening that they've already conducted. So right now, the Bank of Canada wants to put on a brave face and suggest that they can hold at these types of levels of interest rates for quite some time. I'm not sure that that's going to end up being true, but that's what they're going to say this week, no doubt.
And I guess the bigger question, this has certainly seeped into the U.S. dialogue, but the fear over breaking things. Now, the Bank of Canada had already hit the pause button. I think a lot of people were concerned about the level of household debt in this country. We just cited some stats on how stretched a lot of Canadians feel as interest rates continue to climb. You referenced the banking turmoil, which was this very high-profile example of what happens, not when rates are high, but when they are ratcheted up so quickly as what we've seen as that reason to hit the pause button. I guess from that vantage point, do you think it makes sense to be a bit more dovish, even if there are still inflationary concerns out there?
I think what matters now is that the Bank of Canada is going to leave the rate on hold. And I think being dovish at this point might work against what they're trying to communicate. And what they're trying to communicate is that, look, if inflation doesn't come down, if the jobs market doesn't cool off, if the economy doesn't slow, there is a risk that rates could move higher. At this point, look, I think that we haven't seen the full impacts of past monetary policy tightening. And that I do expect that over time, we're going to see more volatility in the market. But I think policymakers just have to account for that. We have to understand that as we move forward in time, there is going to be more problems in the economy and potentially more problems in the financial system. They can use their monetary policy tools to focus on inflation, but they have other tools. They have financial system tools, liquidity injection tools that they can use to focus on the banking system, to focus on the financial system. And I think that's a distinction maybe the Bank of Canada might want to make tomorrow. It's a distinction that the Fed made at its last meeting, that the monetary policy tools, the interest rates, the quantitative tightening is going to remain in place because inflation is still high. But we have these other tools that we can introduce on temporary basis to inject liquidity or support markets or financial systems or banks. And that's a distinction that I think that they're going to want to drive home tomorrow.
Royce, do you think central banks, whether it's the Bank of Canada or the Fed, have to get back to their targeted inflation levels? There's so much obsession around getting to, let's say, 2%. Is it a worrisome issue to change the rules on that?
I think that would be a grave mistake to change the inflation target now. I know there are some economists that believe that the inflation target should be 3%, maybe even 4%. But changing the goalpost when you're already missing the target just will leave investors, will leave the public at large with less confidence in the central bank's ability or willingness to hit any inflation target if they're changing it just at the time that they're finally missing their goals. In past experience, they've been pretty good at hitting those 2% targets. That would have been the time to change. And there would have been a lot of, I think, economists that would have agreed that maybe you could have raised the inflation target a little bit at that time. Changing it now would be a huge mistake, I think.
I mean, just going back to that stat from MMP on, 46% of people saying that, like, they're within $200 of having some real issues. Like, how do you navigate that? How does Canada navigate that then?
So, I have an issue with those statistics because it's always often the case that people will say, they're very close to having, having financial issues. The key is that just about everyone who wants a job has a job in Canada, so the income is still coming in. It's really, we need to focus on the unemployment rate. As the unemployment rate rises, that's when we'll probably see the financial difficulties, those risks materialize. And that's always the case. It's not a unique case to today. It would have been the case 5 years ago, 10 years ago, that there's a certain percentage of the population that is vulnerable to an economic shock. And when that shock happens, you're going to see, unfortunately, those households face difficulties.
Well, balancing